Here is a shocking number. In one state, you can legally drive with just $10,000 in coverage for your own injuries. In another, you need over $500,000. The difference between the weakest minimum requirements and the strongest is not just a few dollars. It is the difference between walking away from a crash debt-free and losing your house, your savings, and your future wages. By the end of this video, you will know exactly how much insurance your state requires, which states have the most dangerously low limits, and why the legal minimum is almost never enough. Whether you are in the US, Canada, or the UK, I will give you the simple formula to make sure you are not one accident away from financial ruin. This is not about scare tactics. This is about protecting everything you own. Let me start with the most important fact. Every U.S. state except New Hampshire requires drivers to carry liability insurance to pay for injuries and damage they cause to others. But the required amounts vary so wildly that the system is almost broken. In some states, like Florida, you can drive with zero bodily injury coverage for other people and just $10,000 for property damage. In others, like Alaska and Maine, you need $50,000 per person, $100,000 per accident, and $25,000 for property damage. Those numbers are not even in the same universe. Now here is where it gets dangerous. The most common minimum requirement across the country is $25,000 per person for bodily injury, $50,000 total per accident, and $25,000 for property damage, often written as 25-50-25. That sounds like a lot of money until you realize that a single ambulance ride can cost $2,000, a day in the hospital $10,000, and a broken bone surgery $30,000. One minor accident can exceed those limits before you even leave the ER. Let me break this down into 3 segments. First, I will show you the best and worst states for minimum coverage. Second, I will explain the strange case of the 2 states where insurance is technically optional. Third, I will reveal why buying the state minimum is one of the most dangerous financial decisions you can make. Segment 1. The best and worst states. At the top of the list, the states that actually protect you. Alaska, Maine, Michigan, North Carolina, and Virginia all require $50,000 per person and $100,000 per accident for bodily injury. These are the highest mandated minimums in the country, close to what most experts actually recommend. But even these can fall short. A serious accident involving multiple cars or permanent injuries can easily generate bills of $100,000 or more. At the bottom of the list, the states that leave you dangerously exposed. Florida is the worst offender. Florida drivers are only required to carry $10,000 in personal injury protection, which covers their own medical bills regardless of fault, and $10,000 in property damage liability for damage they cause to others. Notice what is missing. Bodily injury liability, the coverage that pays for the other driver's medical bills when you cause a crash, is not required at all. If you cause a serious accident in Florida without this coverage, the other driver can sue you personally for every penny of their medical costs. A single ambulance ride can hit $10,000, and that is just the beginning. Other states are not much better. California's minimum used to be just $15,000 per person, $30,000 per accident, and a laughably low $5,000 for property damage. Starting in 2025, California raised its limits to $30,000 per person, $60,000 per accident, and $15,000 for property damage. That is an improvement, but still dangerously low. A new SUV costs over $50,000. If you hit one with only $15,000, $1,000 in property damage coverage, You are personally responsible for the remaining $35,000. Now here is the pattern interrupt that most people miss. Minimum requirements are not static. Many states are raising their limits for 2025 and 2026. New Jersey has raised its minimums from $15,000, $30,000 to $25,000, $50,000 for policies renewed on or after January 1, 2023. Some states have even more aggressive increases. Georgia raised its property damage minimum to $25,000. Texas has debated raising its limits as well. The takeaway is that what was legal last year might not be enough next year. Segment 2. The two states where you can drive without insurance. New Hampshire is the only state that does not require most drivers to carry auto insurance at all. That is right. You can register and drive a car in New Hampshire without a policy, but there is a massive catch. You must prove financial responsibility. That means if you cause an accident, you must have enough money to cover the damages. The state requires proof of at least $100,000 in financial resources per vehicle. For most people, the easiest way to prove that is to buy an insurance policy. So while it is technically optional, driving without insurance is a gamble with your entire life savings. Virginia used to be the other state where you could skip insurance by paying a $500 uninsured motorist fee to the DMV. That option is now gone. As of July 1, 2024, the uninsured motorist fee has been repealed. Virginia now requires drivers to carry insurance like almost every other state. That means New Hampshire is the last remaining state where you can legally drive without auto insurance. Segment 3. The hidden danger of minimum coverage. Most drivers who buy only the state minimum do it to save money. Minimum coverage policies can be hundreds of dollars cheaper per year than full coverage. But the savings are an illusion. One accident can wipe out decades of those savings in a single moment. Here is what you are exposed to if you carry only the minimum. First, you face a personal lawsuit. If you cause an accident and the other driver's medical bills exceed your liability limits, they can sue you personally. Your wages can be garnished. Your savings can be seized. You could lose your house. I have seen it happen to drivers who thought they were safe. Second, your own car is not covered. Minimum liability policies do not include collision or comprehensive coverage. If you crash into a tree, if a hailstorm damages your car, if someone steals it, you get nothing. You pay for all repairs or a new car out of pocket. Third, you have no rental car coverage. While your car is being repaired or replaced, you are paying for a rental out of pocket at $100 per day or more. That adds up fast. Let me give you a real-world example. A driver in California with the old minimum limits of $15,000 per person caused an accident. The other driver spent 3 days in the hospital with a broken leg and a concussion. Medical bills totaled $85,000. The insurance paid its $15 in limit. The other driver sued and won a judgment for the remaining $70,000. The at-fault driver lost his savings, had his wages garnished for years, and declared bankruptcy. He saved maybe $300 a year on his insurance premium. That $300 cost him $70,000. Now let me give you the action plan to protect yourself. Do not carry the state minimum. It is a trap. Experts recommend at least $100,000 per person and $300,000 per accident for bodily injury and $100,000 for property damage, often written as 100, 300, 100. That might sound like a lot, but the additional cost is surprisingly small. Upgrading from 25, 50, 25 to 100, 300, 100 often adds only $100 to $200 per year. For an extra $200, you go from bankruptcy risk to real protection. Here is what to do right now. Open your insurance card or app. Look for the numbers for bodily injury liability and property damage. If they are the state minimums, call your agent today. Ask for a quote to raise them to $100, $300, $100. Compare the monthly increase. It is almost always cheaper than you think. Let me recap the key takeaways. Number 1, most states require at least 25, 50, 25, but Florida requires no bodily injury coverage at all, which is dangerously low. Number 2, Alaska. Maine, Michigan, North Carolina, and Virginia have the highest minimums at $5,125. Number 3, New Hampshire is the only state where insurance is not mandatory, but you must prove financial responsibility. Number 4, Virginia has eliminated its $500 uninsured motorist fee and now requires insurance. Number 5, California raised its minimums from $1,535 to $3,060.15, which is still low. Number 6, minimum coverage leaves you exposed to personal lawsuits, no coverage for your own car, and no rental reimbursement. Number 7, one serious accident can exceed state minimums by tens or hundreds of thousands of dollars. Number 8, upgrade to at least $100, $300, $100. The extra cost is minimal compared to the risk. Here is what I want you to do right now. Check your insurance declaration page. If you see numbers like 25, 50, 25, or 15, 35, you are underinsured. Call your agent. Ask for an upgrade to $100, $300, $100. It could save your financial life. If this video helped you understand why state minimums are a trap, hit the like button. It helps more drivers avoid this expensive mistake. Subscribe and turn on notifications so you do not miss my next video, which is called the Umbrella Policy Loophole, that protects everything you own. And comment below, what state are you in and what are your current liability limits? Do you know if you are underinsured? I read every single comment. Thanks for watching. Now go check your policy. See you in the next one.